Hi, in today's episode, we're going to discuss why the IRS has a say on how much you get to spend on your everyday life when you owe money to them. I know. My name is Claudia Moncars, and I'm the founder of Moncars Law Firm. And here at Moncars Law Firm, we help business owners get out of trouble with the IRS. And we have helped them negotiate over $3 million in reductions in taxes and penalties on behalf of them. In today's episode, like I said, we're going to discuss why the IRS has to say on how much you guys spend on everyday expenses when you owe money to them. This always happens with every client. When we start the process of resolution with the IRS, when we start asking them of all the financial information they need to gather for the IRS, they're always surprised. Think about it like if you're applying for a mortgage. That much information, that much paperwork. It's the same thing with the IRS. And they're always surprised about the IRS has this interest in how much they spend on their everyday life. And I mean, they'll ask you everything. They want to know how much you spend on housing, utilities, groceries, even how much is your monthly Netflix bill. Yes, that much they want to know. And the reason for it is because under law, when you owe money to the IRS, they have the right to a lien. They have a lien on your future income. And therefore, they want to make sure that that future income is maximize that future income so that they get paid. And what do I mean by income? I don't only mean the amount that you make every day, either in your business or a salary or whatever it is. What the IRS means in this case is actually what is left over after you pay your reasonable expenses, everyday expenses. And I say reasonable in quotes because what is reasonable to you and me is not the same thing as what is reasonable to the IRS. And this is what they refer to allowable living expenses. So let's talk about the national standards first. So there are the national standards, there's two categories that fit in there, are out-of-pocket health expenses, and then for like general expenses, like for food, clothing, housekeeping, etc. So let's first talk about the food, clothing, and housekeeping, etc., right? And that includes food, housekeeping, apparel, personal care, and all other minimum credit card payments, and anything else that we have. And for food, please remember that this includes groceries and anything you take out food when you go out to eat, right? So, and like I said, this is a national standard. So this is how much the IRS says you should be spending, according to them, the allowable living expenses, no matter where you live in the US, whether it's in South Florida, like in Miami, where it tends to be a little more cost of living higher than, let's say, Boise, Idaho, where it's so much cheaper, the cost of living. It doesn't matter. They'll give you that amount. And it's on a monthly basis. And it depends on the amount of people in your household. And for instance, if a family of 4, it is $1,123 in 2023 when we're filming this. So if you think about it, that is, it may be enough for you, for your family, or it may not. It depends on where you live, in all honesty. But it doesn't matter to the IRS. That's what they said. So you have to think about that, right? And then the other, and one thing though, for this one, you need a backup. So whether you spend that amount or not, the IRS will allow you to spend that. The other national standard that they have is for out-of-pocket medical expenses. And in this case, you have to think about, for instance, any of your out-of-pocket medical expenses, for instance, when you go to the pharmacy, eyeglasses, dental payments that you have to make, your copay, all that falls in out-of-pocket. And they divide it between whether you're under 65 or over 65. And the amount that they give you is for under 65, $79 a month, and for over 65, $154 a month. But the thing in here is that you can either take the amount that they give you without backups, or if sometimes our medical expenses that may be higher, so they'll give you the actual amount that you spend. So this one is one of those that if you spend a little bit more on medical expenses because you have sick members in your family, or just that month you end up spending more, you can actually give that back up to the IRS, and they can take that they can increase the amount that they allow you to spend for out-of-pocket health expenses. So now let's talk about, so those are the national standards. So now let's talk about the local standards. And those tend to be either based on whether the state that you live in and all the way down to county, or by regions, right? So let's talk first about housing and utilities expenses, your housing costs. And for instance, the housing costs, and that includes, when we're talking about housing, It is per state and per county. So that includes how much you pay for mortgage and rent, your utilities, all electric, water, internet, telephone, trash pickup, all that is included. Home insurance too, property taxes that you pay, all of that. And for instance, in a family of 4 here in Miami-Dade County is $3,053 for family of 4. That's what you get to spend for housing and all, including all those things, right? And like I said, it all depends. But once more, what the IRS think is reasonable may not really be reasonable and may not correlate with what prices are, especially because the prices, what they set this annually. So maybe the economy changes, inflation happens, something changes that number. But I've been practicing for 20 years. I've never seen it actually be correlate with reality sometimes, but that's what they give you. That's what you have to work with. The other locals or local standard that we have is for transportation. And here's a little bit of like a hybrid, right? We have 2 things that we look at, either for public transportation and if you own a car. So let's talk first about whether for when you own a car. And here is split, and this is why I call it a hybrid. It's split in between the cost of the ownership and the cost of maintaining a car. So if you have monthly car payments, then this is where, and that's set nationally. And the monthly car payments, let me look it up. It is for your monthly car payment, it is $629 per car. And here is one little thing here. When you have to remember, it is, if you're a family of 1, you're allowed only 1 per car, 1 car that you're allowed to take the expenses for. However, if you're more than 1, then you're a maximum of 2. So that means if you're 2 working parents with an adult child that goes to college, and obviously they may need a car to make it to college, the 3rd car, the expenses won't be allowed to be taken into account. And why we care, once more, remember, they have a lien on that future income. So they care about the income that you get, minus expenses, allowable living expenses, that gives you future income. So here we're looking at that allowable living expenses. That 3rd car expense won't be allowed, or the operating costs won't be allowed. So like I said, for the cost of the ownership, that's national. But then it comes to the maintenance cost for maintaining the car. And that is based on a region, and the prices change according to where you live in the Northeast, Southeast, all that. And that's not necessarily state, but a region. So that's how they do it. You are also allowed, if you don't own a car. Oh, and a little thing first, you only can take deduction for what you actually spend. So let's say you have car payments, you can't take an ownership. You cannot deduct what they will allow you to spend for car payments. Is what you actually spend, and you have to have the backup for it. You have to have all the documentation in case they ask for it. Then let's talk about if you don't own a car, or maybe sometimes you take public transportation to work, like they do up north, right? You're not going to drive every day into the city, New York City, or in DC or in district, right? So you may just take public transportation. In that case, if you own a car and take public transportation, you can take both. It's only the actual cost, and you have to have the backup for it. So you have to show what you actually spend. Then for if you own a car, then it's public transportation, and it's a set amount, and it is $218. And for that one, you don't need the backup. So that will be okay. So those are the national standards, right? That's what it is. But now let's talk about the magic, because this is where you can actually have some planning and actually use the rules to your benefit, because at the end of the day, it's only about paying what we owe, not more. For instance, when I said there's always a little wiggle room here. When we say what is allowable and reasonable, allowed living expenses, but there's a little wiggle room. For instance, let's go to the national standards for how much you can pay for a car, $629, right? But let's say that you're in construction and you need a truck to take all your tools to the construction site every day, then your car payment be more than $629. In that case, you can argue to the IRS, in most cases they'll accept it, that you need to spend more. But once more, you need to show the backup. Also, for instance, or if you're a realtor, a high-end realtor, and you made car payments maybe a little bit more because you may need a higher-end car, sometimes the IRS too. And then also, let's go back to the housing. Let's say you have $3,056 for a family of 4 in Miami, in Dade County. That
not always is, that's really not easy to find, but maybe you have your own business and you work from home, you have a home business. So maybe the cell phones are really only used for the business, then you can deduct that, move it to the business side. So we are reducing the amount, right? Then we take, for instance, internet, maybe part of it is used for the business. So part of it can be allocated to business and things like that. So that's some of the things that like I personally go through when I get all the financial information from my clients, and we do it on our office. We look to see if there's any planning that we can do for them. For instance, if they don't have health insurance, maybe we start paying for the health insurance because they'll eventually need it. So might as well use some of that. So because that's an allowable expense, actual health insurance. Other allowable living expenses are actual expenses that you have. For instance, if your court order is child support, court order alimony, student loans that you're required to pay. For those of you that live in states that Florida, we don't have a income tax, but in most of the states they do. And if you owe to the state too, if you already have a payment plan set up before you set the payment plan with the IRS, remember the key is before, then they will, for the most part, respect that payment plan and the actual payment that you pay. If it's after, then it's some convoluted formula that I won't bore you. Even it bores me, and I love numbers, so I won't tell you about that one. So the whole thing, like I said, is once more, yes, the IRS has a vested interest on knowing how much you spend, and in a way dictating how you spend your income, because they have a lien on your future income. But at the same time, you can use all the rules that are out there and kind of let them know, yes, I know that this is only my allowed living expenses, but look at this. I may have more medical expenses, therefore I get a little bit more. Or I may have, I may need a higher car payments or have higher car expenses because of my business. That's the only way I make money and the only way I can pay you. So I get to spend a little bit more. So there's different things that you can do. It's all about knowing the rules and then knowing them, how to apply them, and best applying them to your benefit. And then you can play the game the best. So just remember, like I always say, knowledge is clarity. And when you have knowledge is power, and when you have, and it gives you clarity too. So I hope you enjoyed this video. And as you know, if you enjoyed it, please make sure to subscribe to it, to our channel, so you can learn more about it. And if you know somebody that this information is great, share it with them as well. Talk to you next time. Bye.